Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, September 1st, 2017. I wanted to do a video on the insurance stocks, namely the property and casualty, as well as the reinsurance companies. I mentioned earlier today on the front page that's one of the sectors as I was going through. I went through both today and last night, easily well over 1,000 charts, and in doing that, I really wasn't focused on the effects of Hurricane Harvey. But we all know that gas prices shot up because a lot of refineries were taken offline, things like that. That would have been a good trade on the long side. Unfortunately, I missed that one. But as I went through the charts, I noticed a common theme among a lot of these insurance companies. Uh, Very bearish charts. Many have already broken down. Some haven't yet. That's why I'm doing this video. There's still some trading ops here. Obviously, the hurricane's going to have some impact on it. All the damage that Harvey has caused and is still causing. I think they're still getting rain out there. And as you guys might know, there's another hurricane on the way from the Atlantic, so that would be a nice 1-2 punch. I'll say this: it's always a good idea as I go through these charts. When I have time, I like to dig into the fundamentals on a trade, especially if I plan to be in it for more than just a quick swing trade. So, by all means, if you see a setup that you like here and you plan to tuck one of these away for a while, and go for the longer gains. Do your own due diligence. Take a few minutes to look into the company and see what kind of exposure they do have to Hurricane Harvey or the other storm that's coming up if it does hit. Um, and Also keep in mind that these stocks, like I said, were priced. Many of them have already topped and or are priced, clearly bearish. They were clearly bearish before the storm hit. Now, when I look at the long-term weekly charts, these stocks have had a tremendous advance. That is largely a reflection of the fact there haven't been many major, disasters in natural disasters in recent years. There's not, it's been kind of quiet. I've lived in Florida my whole life, and hurricanes, it's quiet years go by without a big storm coming, and all of a sudden, boom, they'll hit, you get three within close proximity in a span of just a couple of years or a few years. Um, Point being that the insurance companies, their coffers have been swelling up, meaning their reserves. They haven't had to pay out a lot of claims, and so we'll see what Harvey does to them, and we'll see if we have any follow-up storms this year that do some major damage to the U.S. or wherever their markets are. All right. So that being said, if you're not familiar, reinsurance is are insurance companies that provide insurance to insurance companies, just as it sounds, reinsurance. So State Farm, Allstate, if they have a big exposure to a certain market, or like I said, well, I'm in Florida, we get hurricanes have done some major damage since I've lived here, and State Farm would have probably gone to the wayside, and Allstate, all those if they didn't have reinsurance. So they step in and help mitigate the losses for insurance companies. So let's take a look at there. We'll start with the reinsurance sector. I'm going to run through the charts quickly. That way I can get into some of the property and casualty insurance stocks. I put together just a short list, these highlighted ones that stand out. Some are actually bullish, and I wanted to point that out that it's not a blanket short on the whole sector. Regardless, I don't believe there's any ETF that specifically targets P&C or reinsurance. So here's ACGL, Arch Capital. This one has not broken down yet. A lot of meat on the bone. I probably should have spent time on the reinsurance industry first of all. IX 1600 on TC 2000. Bearish rising wedge, very clean, well-defined uptrend line off the mid 2016 lows. Breakdown and impulsive selling. Uh, Counter trend bounces are always not just possible, but likely. You get pretty stretched, but counter trend bounces aside, I see another 2.5% or so downside to this level here, and I can very well see another 8.5% down to about this 1198 level. You look at the long-term chart, the weekly chart, and you can see negative divergence. I haven't drawn it out yet on here. Divergent high, very steep divergence as this sector pushes higher. And there's a long-term downtrend line that we're dancing on now. So if they take out that long-term downtrend line, that's quite bearish. And this is where I see that sector, that industry going. And that's well, right here, the way I measured, about a 13% drop. So plenty of downside left. Some of these names are, like I said, haven't broken down yet, like ACGL, Arch Capital Group. Break of that trend line would take us down here to 92.13. Probably get a reaction there. That's definitely support. I would almost bank on a reaction, meaning a bounce there, and then ultimately a breakdown and a continued move down to about this $88 level there. All right, next up, RE. Everest Regroup Limited. This one just recently broke down. Everything you like to see. This is a bearish rising wedge pattern confirmed with negative divergence down here. You can see the impulsive price action following that breakdown. There was a little kickback rally to backtest the trend line from below. And this one still has another at least 3% downside, in my opinion, down here to about the 240.36 level. This is a support zone somewhere in there. I would expect a reaction bounce, and there is certainly the potential for a much deeper correction in the stock down to about the $200 level. That would take us about 19% lower. Take a look at the weekly chart. That confirms what I'm seeing. Here's negative divergence. This stock is coming off the most overbought levels that it's been at least in a decade. This is a 10-year weekly chart, possibly in history. So there's another uptrend line. That was a pretty decent correction. This is a log scaling chart, using a chart using log scaling, and that try to grab it. It's hard to grab that, but that's about a 10% drop. This is a very bearish candle. This is the first weekly candlestick close, and that's what you want to see on a weekly chart. You want to see a weekly close. Today's Friday. There's less than half an hour to trading, so we'll definitely close below that trend line on RE, and that is a powerful longer term sell signal. That's my point. So there's probably considerable more downside in the coming months, not just days here in that one. All right, let's go look at a few more. RGA, bearish rising wedge, confirmed with negative divergence, yet to break down. We have intersecting support levels here. We have uptrend line and price support, both coming in right around each other there. So you need to see that trend, this horizontal level go. Let me give you that level real quick. That's 131.60. So break of 131.60 would be an entry and take us down. At least there's a 7% drop to that 122.30 area, 122-ish, call it. And possibly more after that, but for now that would be my target. So you're looking at about a 7% gain on that one. RNR, uh, it's getting close to a support level where it's probably going to bounce. There's only about 2% downside till I see a reaction here on this 135.44 support level. But if that goes, there's quite a bit more. It's pretty thin down below that level. VR, this one already broke down. As I said, a lot of these stocks have already topped. This one had a divergent high back here when it topped. There was negative divergence in place. I drew the lines out here. That actually should have been right there. Okay, because you don't have divergence unless prices are making a higher high against indicators making a lower high. So it broke down everything you want to see. This is technical analysis at its finest. Very impulsive selling. You had that horizontal support level as well as the uptrend line. That uptrend line comes off the early 2016 lows. Quite a few reactions to validate it. And then boom, you came down, you hit support, bounced above that support level for a while, kickback rally, and then boom, took out the support. We're moving lower, and I don't think this stock will stop until it gets there. Again, counter trend rallies along the way. I'm talking before all is said and done, probably going down to 48.90. So there's a little more downside left on that one. TPRE, nice looking chart. If you're bearish, that is negative divergence right at that recent high right here. You can see the divergence down there. I also have a potential head and shoulders pattern. It would be nice to see this one kick up a little bit more and put some symmetry here on a right shoulder. So this would be your left shoulder. There's your head. There's your right shoulder. And then boom, we come back down to the neckline. You have a trend line here, which can serve as an early sell signal. You can also short, somewhere in here and put a stop above where a right shoulder, that you don't have to have perfect symmetry on a head and shoulders pattern. But sometimes you get a much better entry if you do that. And then your official sell signal, or maybe if you short it up here, you add on a break above this neckline right there. And if so, that one is probably headed down somewhere around the $13 area. MHLD, there's one that already took it on the chin. I just wanted to point this out. This one probably had some exposure to the storm, I guess. 37% drop in just a couple days. I wouldn't short it there. It's already down too much, and I don't see an objective reason or level to short it on that chart. This one looks more bullish than bearish. Just wanted to point that out. That's WMIH, very thinly traded. I really don't like the stocks. When these candles look like this, that means there's very low volume and it's a low price stock. But just trying to point out that not every stock in the sector is looking bearish right now. TIL, Till Capital, again, thinly traded when you see these candlesticks. However, look at this level, 388. That thing has danced along 388 since 2016. I mean, numerous reactions. So if it goes below there, that's pretty bearish. That one's probably going a lot lower. AC, ACGLP, Arch Capital Group, uptrend line, negative divergence. So we have to zoom in here a little bit to see that divergence. There it is. You can see it on the PPO. It could push up a little. You don't have a sell signal until and unless this uptrend line breaks. But if you do, that one's probably heading quite a bit lower. At minimum, I would put a target right here. And that's about a 2% drop. Probably get a kickback rally, and that one could move all the way down here. There's the sector. All right, let's move on to the property and casualty insurers. That's IX 1590. And you can see divergent high, negative divergence. Let's just take a look at the weekly chart. I haven't really annotated the weekly chart on this one in a long time. There it is. You've got a very long-term trend line that goes back. It's the bull market uptrend line. So very bearish if that gets taken out. You can see we now have confirmed negative divergence on the weekly time frame. There it is. Very overbought. The last time we had a divergent high was back here. And that was just a correction within an ongoing bull market, but it was still good for, if I zoom in enough, you can grab the top of that candle. I'll tell you that was a drop in the sector of about 11%. So well worth a swing trade. There's nothing wrong with swing trading, just counter trend moves, long or short in bull or bear markets. That's what I like to do. All right, so this one I can't really give you a good uptrend line, and that part of that is because there's some bullish and some not so bullish charts, some bearish and not so bearish charts within the sector, so it's a whole mishmash. Now what I've done here is highlighted just this is all we're going to go through, about a dozen or so stocks, the blue ones that stand out to me, and that'll give you some trade ideas, and we'll wrap this up. This is just using an example of a chart that looks more bullish than bearish because we have a positive divergence down here at this recent low, although this is a big descending triangle pattern. So a break below that level would be bearish, especially a weekly close. However, an upside break would be bullish. So watch a break for that trend line. I'm not recommending that as a long right now, but it may be if we get up near that trend line and the charts start to firm up there. PGR, here's one, Progressive. There, everyone knows Progressive Corp. They do a lot of advertising. There you have a little bit more downsides. Train has already left the station, but here's the point that these stocks are breaking down, and they're early. This one's only a week into the breakdown. It's down about 4.5%. It'll be down about 5.5 when it hits this first target that I have, and I could certainly see the potential for more. Probably get a reaction there. Maybe, maybe not. Especially if that other storm keeps heading this way and looks to threaten these companies even more. A little minor reaction there, but to try to quantify it, this is the what I call if things get ugly target. That's about another 11% downside on Progressive. Let's just take a peek. Nah, I didn't mark the weeklies up, so we'll just stick to the daily charts right now. CNA, nice long uptrend line all the way back from mid 2016. It's a price channel, an ascending price channel, divergent high. You can see the divergence as prices move higher, and it just recently broke down. It's flagging, a little bear flag action right there. So if that breaks down, there's your flagpole. You look for breakdown below the flag, coming somewhere around here, right about where my first target is. And that first target lies down about 10% below. And then there's another second potential target all the way down here, and that's my if things get ugly target, about 18% drop on where did I go to? I jumped to, oh yeah, CNA Financial. NGHC, National General Holdings, just want to show you this one. There's technical analysis. A great example of it right there. You can see these reaction lows, 1, 2, 3. We had a reaction there for about a week or so after it hit that. Broke support and gave up the ghost. You can see the impulsive selling. Uh, that one, I wouldn't chase it now. Had I caught it earlier, sure, but maybe on a back test of that former support level. Once support is broken, it then becomes resistance. So if you get that, that might be a nice opportunity. I'd also have to look at the weekly chart to verify an entry on that. Uh, TRV, the Travelers Company, divergent high, you can see the negative divergence, and just look how much that divergence has played out. So again, this stuff, I know a lot of people argue and say, oh no, that's all in the news. It's just has to do with the hurricane. I, Almost always the fundamentals in the news is it goes hand in hand with the technicals. In other words, it's not the news that drove it. It wasn't the technicals. The news may have been the catalyst, but it was already priced into the charts. A reversal was. So you can see a nice drop of about 8% in very short order in Travelers, right down to a trend line support. So we may get a little bounce here next week. But from the look of that chart, it's not so hot. That's not one of my favorites, but I just wanted to show you what's been going on in a lot of these stocks, especially these big name companies. Most of you guys have heard of the Travelers and Progressive and CNA, all these companies I'm mentioning. Lows, there's a nice uptrend line to watch. Looks like a parallel ascending price channel there, parallel trend lines, a negative divergence in the price channel. And if and when that breaks, looks like you got a lot of thin air down below, about a 9% drop to hit that target, about 42.25. So plenty of meat left on that one. But of course, you need the sell signal to trigger, which is a break of that trend line. XL Capital, you can see nice well-defined trend line. I didn't draw it out for you, but I could do that. Like everything else, you have a divergent high. This was even a price channel too. A lot of these were moving up in channels, if not wedges. And there's your negative divergence. You can see up to the high. Big blip down off that divergent high, little kickback. We caught support right on the trend line, bounced, and then boom, broke the trend line. Nothing but impulsive selling sliced right through this support level, and we're headed down to this support zone right here, which is another about 3.5 to 4.5% more downside on that one before a meaningful reaction. NMI Holdings, there's the trend line to watch. You can see the divergent high. We had a trend line here, broke and back tested. We've moved sideways since. So really what you're looking at here is a stock that appears to have topped. It's been in this topping process here. But this is you don't have a short entry trigger until and unless this line breaks. That line is at 1036. So call it 1030 to be safe. And if that breaks, we're probably headed down here quite a bit. That's a drop of about 16% or so. So a lot of meat on that one. SAFT, there's a little, not one of my favorites, but there's a minor uptrend line, broke down and we back tested. So if nothing else, this is an objective short entry here on the back test. You can put a stop just above the line. I would put it right above these recent reaction highs right here. So that would be your stop. And whether or not the trade pans out, it's hard to argue that that's not an objective trade. You have about 1.5% of loss, or call it 2% if wrong. And if we go down here to my minimum target, that's 8.2% drop. So very attractive RR. And that's what trading's all about, in my opinion. WR Berkley, there it is, 65.74 is a very nice support level. We're testing it again. We had a divergent high back here, and like the stock I just went over, that stock appears to have topped. Maybe that's just a consolidation pattern. You get an upside break and off to the races. But at this point in time, based on everything I'm seeing in the charts, I'd be looking for and ready to position for a break at that level for a short trade. Again, I haven't marked up all the weekly charts here. I just wanted to take a look at this one and see if it does look toppy, which it does. All right, a couple more. Here's Allstate, ALL, just recently broke down. So this one's offering an objective short entry here. Had a quick move down, gap down below the uptrend line, and it's been consolidating since. That's flagging action, and it looks like it's starting to move out of that flag. So I expect next week we'll probably see this one come down here. Another 2% drop, get a reaction from there. Let me draw it out for you. Depends how you want to trade this. It'll bounce there. Regardless, even if we slice through it, we don't have to bounce. Keep that in mind. That's just what my preferred scenario would be. But if and when we break that level, it's about 88. We're coming down here, most likely to the 83 level. Let me just confirm that. Yeah, 87.93, so call that 88. But you want to wait till break below 87.90, and that takes you down to about 83. I have that number right at 83.12 to give you an idea. Let's just say you went in here. That's about a little over 7% to that target. That's my preferred swing target now, and this is my if things get ugly target. That's about a 15% drop. CB, oh, nice one. Very nice trend line. Look at all these reactions. This one goes back to 2015. Divergent high, sitting right on intersecting trend line and horizontal price support. And it's flagging at that. So this one, here's what I think will happen. This one's probably going to bust next week. Come down here. Let's just give you some targets. That's here. I'll put it up here so you can see the pop-up box. 136. It's a little bit above that. 136.06 is where I had the line. This one's 130.24. So even to the first target, you're talking 3%, and down to the second target, you're talking 7%. KNSL, Kinsale Capital Group. Uh, Looks relatively thinly traded, but a little breakdown and a back test. And here's your targets down here, 35.05 and 33.05. And that's about 7.5 and 13%. Last two, AFG, American Financial Group Holding Company, nice ascending price channel, confirmed with negative divergence. Your sell signal would come on a break below that level from where we're at right now. You're talking about 6% to the first target, 9.25 to the second target, and I would cover anywhere from here if it gets ugly, 12.8, 12.7% drop all the way down to about a 14% drop. That last level is at 88.15. And last one, Kingsway Financial, KFS. That one doesn't look bad at all. It might pop over this downtrend line. I can't see a reason to short that. If it fails at the downtrend line, you want to short it there because you think this one's going down. Um, you have some support down here, but again, I don't even know why I flagged that one. I'm not so crazy about it on the short side, and don't really think I'd take it if it popped above that trend line. So we'll leave it there. Try to keep this video relatively short. All right, just wanted to get those trade ideas out to you guys. Remember, Mondays the markets are closed here in the U.S., so we'll see what happens on Tuesday, and I'll try to get some of these out as an official trade idea by then. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.